Good evening, ladies and gentlemen, and welcome to today's webinar. The title of today's webinar is Considerations for Limited Company Establishment in China. I would just briefly like to provide you can read here some of the services that we offer. I think most of you that are in attendance know who Klako is. Just a brief introduction to myself. My name is Christina Kohler. I'm a director of Klako Group, and I'm managing our China offices and our China team. During today's presentation, I'll be providing information on what to consider when one establishes a China entity. There are numerous considerations which need to be made concerning the corporate structure, employment of staff, CHOP control, drafting the Articles of Association, and I also want to point out some general common mistakes that foreign investors make when entering the China market. I hope the information today will be helpful and will guide you in making the right decisions when entering the China market. If you are already in the China market, then perhaps some of the discussion points that I'm raising today may consider you to restructure some items within your entity. I would like to start off with today's presentation by highlighting the types of entities which can be set up. The most common form is a limited liability company, an LLC, which is limited up to its registered capital amount. There is a lot of confusion and misunderstanding by the terms of WFOE and FICE, and I would just like to point out here what they are. A WFOE is a limited liability company. It is a company liable up to its registered capital amount, and it is called a wholly foreign-owned enterprise, which just means that it's owned by a foreign investor. That is it. A foreign invested commercial enterprise is also a limited liability company. In fact, it is exactly like a WFOE in that it is owned by a foreign investor. The only difference between a WFOE and a FICE lies in its business scope, whereby a FICE can handle import and export functions. In addition, there are domestically invested enterprises, which basically means that it's a company owned by a mainland Chinese investor. And there are joint ventures, which are owned between foreign investors and Chinese investors. The legal status is that a LLC is an independent legal entity, and the parent company requirements are solely that it is either invested by an overseas company or an overseas individual, or by a domestic company or a domestic individual. Klako Group, as a consulting firm, we advise against investing as individuals into China. There's just too much risk at stake when making such an investment, particularly as all liability would fall then on the investor, the individual. And we therefore definitely recommend either utilizing the headquarters or establishing a holding entity that can then be the shareholder into China. Corporate structuring. This is quite an interesting topic because many people are not aware of the functions. The first item I want to point out is the business scope. Now, basically, there are three types of entities in terms of business scope that can be established. The first being a service company, meaning that you're providing services. The second is trading, meaning import and export in and outside of China, or purchasing domestically and selling domestically. And the last is manufacturing, production in China. Generally speaking, a production company can do trade and service, a trading company can do trade and service, and a service company can only do service. The business scope has to be defined clearly when you are incorporating the company. Naturally, you can always add activities inside, but this does require an application process and approval. The body which does the approvals is the Administration of Industry and Commerce. The next topic is capital requirements, and I cannot tell you how much confusion there is in relation to capital requirements. When you do research via Google or you talk to different consulting companies, law firms, or even the Big Four, everybody will tell you something different. I would just like to provide you with the practical regulations, what is written in the laws, what is required, and a basic practical approach. An LLC is required by company law to invest no less than 30,000 RMB. Now, you have to understand that this 30,000 RMB, it is not just a number that one creates to say, I'm going to put in 30,000 RMB. This is capital that you're actually going to use for your startup in China. And therefore, you need to make an appropriate business plan to understand what are your cash flow needs when you're starting your business in China. It is not just that you can randomly remit funds from your parent company or from your basic individual bank account into the China entity. The shareholder, who is appointed as the shareholder, is the only entity that can actually remit registered capital, which is this 30,000 renminbi minimum amount, into the entity in China. So again, I cannot emphasize it anymore. You have to base it on what are your actual cash flow requirements within the entity. There are basic rules of thumb whereby your registered capital can be a maximum of 70% as machinery and 30% as cash. Now, this isn't written in stone. As I said, it is a rule of thumb. But again, if I was consulting a client, I would definitely recommend to put the whole amount in as cash, for the main reason that if you are importing equipment, which is part of your registered capital amount, that it will be highly investigated during the customs procedures. And just to give you one example, we did have one client whereby his imported equipment was stuck in customs for a year and a half, and it was utilized as registered capital. The Customs Bureau wanted to see the user manuals, the blueprints of the machinery, etc. It is much easier if you just purchase the equipment and say that you're purchasing it for either production purposes or for further trade purposes. There's less risk of this occurring in the Customs Department. Registered capital and total investment figures are both required during the application procedure. The total investment is that which is necessary to realize the company's operations, while the registered capital is the equity pledged to the local authorities. So it is what is you're liable for. The entity is only recognized by the amount of its registered capital, which is injected. Now, again, you might have all heard of minimum amounts based on what industry you're in, what sector you're in, or in which city you're in. Basically, company law states that you must invest at least 30,000 RMB. Now, I would just like to say what the tax law states. The tax law states that if you are looking to actually issue VAT invoices domestically in China, which means that you are selling goods in China, you need to have a minimum registered capital requirement of 1 million RMB. So although company law states 30,000 RMB, the tax law states 1 million RMB if you want to issue VAT invoices on the domestic market. Now again, there are city-by-city cases. Dongguan, for example, in Guangdong province, they only want to attract high investment firms, and therefore they have stipulated that a company who is looking to establish an entity in Dongguan must have a minimum registered capital of between 500,000 and 1 million US dollar. So keep this in mind. Certain cities may have special treatment in terms of what type of companies they want to attract, and therefore may have separate regulations in terms of their registered capital. But generally, if you're looking at the big four cities in China, Guangzhou, Shenzhen, Shanghai, and Beijing, they just have the requirement that either 30,000 RMB or 1 million RMB. But again, I cannot emphasize it more. you need to recognize that your registered capital amounts should be measured against your business cash flow needs and not against minimum qualified amounts issued as guidelines. You need to make sure you calculate what your cash flow needs are. Now the issue is obviously, if you run out of cash during your startup period, there are two alternatives that can occur. One, you increase your registered capital amount. Klako itself, we would advise against this because you're also then increasing your liability. You could also issue service invoices to your headquarters, which could be equivalent to your operational cost, and this could then be sent to your China entity just to manage your operational cost. It's not an ideal solution, but it is a loophole if you don't want to increase your registered capital amount. But again, make sure you calculate it. And when you calculate your cash flow needs, make sure you take into consideration import duties, VAT requirements. These are all things that are generally overlooked when creating your business plan and your forecasted budgeting for your China entity. On this slide, I just want to point out that there are ratios installed. If you are investing up to $3 million US, then your registered capital has to be at least 70% of this. So to give you an example, if you are having a registered capital of 1 million RMB, which today would be approximately 158,000 US dollar, then this would be 70% of your total investment. You also have a time limit in terms of how quickly the registered capital must enter the bank account in China. Once your business license is issued, you need to remit at least 20% into the account and the remaining amount within 1 year from the date of issuance of the business license. Again, it varies depending on your registered capital amount that you're investing. Now is corporate structuring and the employment of staff. I will delve a little bit more into the corporate structuring side because it is a little bit different and a little bit more complicated than in other countries. The investor, which is either a company or an individual, is the designated shareholder. The investor shall then appoint a board of directors, whereby there should be a minimum of 3 persons and a maximum of 50. A supervisor must also be appointed by the investor, and the supervisor's role is to supervise all activities being conducted by the board of directors. For companies that are in shortage of senior management positions, meaning, for example, they don't have 3 people to allocate as board of directors, then 1 person can be appointed, and the name of this person is called an executive director. And their role is identical to the board of directors. It's just that whereas previously you would have a board of directors making decisions, here you would just have 1 person making all the decisions. Generally, by default, the chairman of the board or the executive director is also appointed as the legal representative. The legal representative is responsible for the activities of the company and is considered the legal face of the entity. What this means is that they have the power of attorney to sign all documents related to the company. They also have the power of attorney to have access to the bank accounts. In fact, it is the legal representative who is responsible to open the bank accounts in China. Obviously, it is our recommendation companies should choose somebody for this position who is familiar with the China business, will be traveling to China, knows the staff, and the people that are involved in the China company. It is not advisable to choose somebody who is randomly sitting in a senior management position and knows nothing about the China business and isn't involved at all. This person will be the first person that the government or even the police will contact should there be any trouble within the entity. It is recommended that for all foreign investors, they pay particular attention to who they appoint in these positions, that the people who are appointed in these positions are aware of what their responsibilities are and what the risks are. And it should be noted that should there be any changes in the corporate structure, these have to be immediately filed with the Administration of Industry and Commerce, and replacements have to be made immediately when you make this notification. Now, what happens when you want to terminate a legal representative, or even a board member or a supervisor? Well, problems can arise. There have been cases whereby legal representatives were not happy of their termination and therefore were not assisting in the process to do the replacement because their assistance is required. The legal representative, in theory, controls the legal representative CHOP and the company CHOP, and I will go into CHOP details a little bit later on. And what this means is that this person is then responsible to approve actually his own termination documents. So it also lies in the investor, who also makes this decision, but it is also the legal representative who has the power to make this decision as well. So again, it's very important to know who you're going to appoint in this position. You also have the supervisory board or the supervisor, and the role is to exercise supervision over the execution of company duties by the directors and the senior management personnel. If notices are delivered to the supervisor when the legal representative plans or takes an important action, there should be less risk of the legal representative being held individually liable for those actions. So it's important to involve the supervisor in the activities and the day-to-day decisions that are being made within the entity. As I mentioned previously, the supervisor's role is to supervise the activities of the board of directors and the legal representative and the general manager. So obviously the person appointed in this position cannot also be appointed as a board member or as a legal rep or as a GM. What are the considerations for the ease of allocating these personnel or appointing these individuals? And there are several precautions that can be made to protect the investors. The first being a legal representative should be selected carefully. Additionally, and this is our recommendation, the appointed person should sign and CHOP undated termination-related documents before being appointed. This will protect the investor in case they need to make a change or a sudden termination. You already have the signed documents available. All you would need to do is maybe fill in the information and make the submissions. The legal representative and the other directors and managers can be provided with individual liability insurance, as the individuals invited to fill these positions may demand that investors give them a broad indemnity. So this is something also to consider. The shareholders or investors should define clear limits on the authority of the company's legal representative and board of directors, along with procedures for approving actions that exceed those limits. They should observe and monitor these procedures, and potentially they could consider putting these items on their company's website so that other counterparties, and this is for example customers or suppliers, also understand the limits of these individuals. So again, there are many precautions which can be made. Putting the information on your company's website might be over the board, but again, these individuals should understand, and it should be maybe written in the employment contracts or in the articles of association, what can they and can they not do. When establishing an entity in China, the parent company should not rely on the published standard form of articles which are issued by the local governments. The best compromise is to adopt the basic style and sequence of that form and add detailed provisions on the authority of the legal representatives, board of directors, as well as other senior management staff. And these should be all made aware to these individuals as well. Additionally, the company should have a CHOP control mechanism in place to record all usage and restrict access to the CHOPs. It should be easily available to make sure that you know when the CHOPs are being used and when not. And if the person responsible for the CHOPs is not there, perhaps leave the CHOPs with your accountant, law firm, or an individual outside who can take control. The employment of foreign nationals and the employment of mainland Chinese, this is just standard procedures. One obvious point that I would like to mention is that you cannot hire staff without being properly registered in China. Means that you cannot hire staff prior to not having your business license. It's like this anywhere else in the world. In addition, for foreign nationals, they should not start working until they have their work permits in place. Again, this is just common sense, like anywhere else in the world. Now comes CHOP control. I've listed here the basic 5 CHOPs which are issued by the government. And I just want to emphasize here, there is only one set of CHOPs which are issued by the government, and they are registered with the Public Security Bureau. If you make duplicate CHOPs, these are considered fake and invalid, particularly if they are not registered with the Public Security Bureau. I want to emphasize that. There's only one set of CHOPs, and any duplicates will be automatically considered as fake. Any person in possession of the legal representative or company CHOP may exercise the legal representative's power to bind the company. What this means is with the company CHOP and legal rep CHOP, you can sign contracts, you can create contracts, you can do anything. And in order to prevent unauthorized use, each company should restrict access to the CHOPs and delegate a custodian who would have the relevance and have the power to hand out the CHOPs when needed. There should be a record of CHOP usage, including time, date, signature, and purpose of the use. And this should be written in the employee handbook in order for all employees to understand this. Obviously, CHOPs should never be used or passed on to anyone without prior approval. A common oversight made by many foreign investors is that they leave responsibility of the CHOPs to local and employees. And in some cases, after only over a year of operation, find out that contracts with third parties were chopped, which had not been approved by the board of directors or the executive director or even the headquarters. Another case study can be seen in the form of an employment termination. At the moment of firing board directors, executive directors, the board or the executive director may discover that local employees or the acting GM has used the company to renegotiate employment contracts, giving out higher or greater compensations. This is really worst case scenario, but it does happen, and it's something that you need to take in mind when you're operating and controlling your entity in China. It's also very important to understand how important CHOPs are. CHOPs are actually considered as legal signatures. And if you misuse the CHOP, it is similar to actually faking a signature. And there are severe penalties, and because it is considered fraud. And for individuals who do actually misuse the CHOPs, there can be prison sentences that are made. Now, recently, I just want to give one example of Shenzhen and Shanghai and Beijing. Recently in Shenzhen, there was a new regulation issued stating that should a company in Shenzhen lose the company CHOP, the legal representative is required to be present and file the application for not only the loss of the CHOP, but also the application to provide new CHOPs in person. So it means that they must travel. If they're not based in China, they must travel in order to do this application in person. And you've got to understand, this is not a quick process. So it is vital that you don't lose your CHOPs. In Shanghai and Beijing, you need to report the loss in the newspaper and make a public announcement. The legal representative is not required to be in person, but once the announcement has been issued for a certain period of time, then the new sets of CHOPs can actually be created. Now I would like to go into considerations for the Articles of Association of a limited company. There are many investors nowadays who just take the government-issued Articles of Associations, which are normally only provided in Chinese. They have their local staff read it through. They never make translations of it, so they actually have no idea what they are submitting as their company bylaws. And generally, to be honest, it's purely to save time because they want to rush the establishment procedure. This can be the greatest mistake that a company makes. And I just would like to go through here what are some of the articles that need to be taken into consideration when you are actually drafting your articles of association. Now, the scope of the business scope. This article is usually standardized. The government usually has standardized scopes of business. It does not mean that you have to use them. Our suggestion is that you actually make the business scope as broad as possible, including items that you can foresee handling, activities that you can foresee handling in the long term. So to include inside both short-term activities as well as your long-term activities, this will save you time from having to change your business scope at a later date. It may be that the government doesn't approve it. Regardless of this fact, at least try and submit it and see what happens. There is no harm. The production scale article, and this is again for companies that are producing in China. It's not related to trading companies or service companies. It may be good to highlight your production scale in regards to your exit strategy. So basically linking your production and profitability scales with what you consider as being unacceptable levels of business, thus requiring liquidation of the company. It is far easier to obtain approval for closure if this is highlighted within your articles of association. So please do consider that. The general manager article, again, there are standard, this is usually standard within what is given to you by the government. Again, I would highly recommend that you outline what are the responsibilities of the general manager and to make sure that this is inside. On another note, I just want to emphasize here another issue. This is again just a recommendation from Klako Group. What we usually recommend our clients is when you appoint certain individuals into the board of directors or executive director, legal representative, general manager, or supervisory positions, to actually appoint senior management personnel that are in charge of the China operation that are based from your from your headquarter office. The reason being is that there is generally very high employee turnover in China. It's standard. Everybody knows this. And as a result, we would recommend that you actually don't appoint you don't appoint local staff into these positions, because you might find that you have to change and update these appointments on a regular basis. And again, it's just very time consuming and there's cost involved. So again, you have to be clever in the way that you're structuring, doing the corporate structure of your entity. The profits repatriation article, this is not in the standard that is given by the government, and it does need to be built into the document. Essentially, this is giving your parent company the right to bill the China entity for services for management expertise, royalties, licensing agreements, interests on loans, research and development cost allocations, sales and marketing cost allocations, and so on. If you don't have these drafted, it may become difficult later on to have your service contracts approved. But if it's already approved within your articles of association, it can already be a great advantage to you. And including these profit repatriation articles right from the beginning, it's just an added advantage. These service contracts would still need to be issued at a later date, but it's just a procedure that would need to be done. And you can save a lot on profits tax if you have these repatriation articles already inside. Then you have the trade union article. This is a standard that is given within the templates provided by the government, and it is definitely an article which cannot be removed. Your staff do have a right to form a trade union in China, particularly if you have more than 25 employees, including expatriates. This is significant as it eats up a mandatory contribution of 2% of the total wages in compulsory payments by the company to fund the union. There is not much threat as strikes are illegal in China, but there have been open complaints, as you have seen in the news, of employees unhappy with wages, and as such, the article has to be kept, but it doesn't mean if you're small scale that you will have a trade union. The trade unions are really for the multinational organizations that have thousands and thousands of employees within and throughout China. The merger and acquisitions article, again, this is usually not included within the standard. If you eventually want to sell the business in China, how are you going to value it? And it's easier to identify these set of rules beforehand and to list them within the Articles of Association. You may already want to identify the asset valuers, accountants, or industry professionals who will evaluate the business, and you may want to highlight that in the articles as well. You may also want to highlight who will be paying for these items, whether it's the China entity or the person buying the company. Then comes the liquidation article, and this is extremely standard article when given by the government. We definitely recommend that you highlight what can be possible reasons for you to liquidate the company and to list all of them. Again, as I mentioned previously, it's linking your profitability scales together with your exit strategy. And this should be clearly identified. The reason being is that when you want to liquidate your company, you do need to go through an approval process. And if the government does not see that it is a valid reason as to why you're liquidating the company, they will not approve your application. But if the reasons are listed already within your Articles of Association and they're linked to profitability scales or something of concrete value that you can show to the government, then they will have no choice but to approve your liquidation process. Now I'm going to go into common mistakes made by foreign investors, and these are happening all the time by all investors that are coming in, and I just want to go through it quickly one by one to explain to you what considerations you need to make. Now the first one is sending startup funds to somebody else before the business license is issued of an LLC. As many of you may know, it takes usually around 6 to 8 months to establish an LLC in China. This includes the application procedures as well as the tax procedures and opening the bank account. Many foreign investors probably cannot wait that long in order to start their operations, and so they send startup funds to either a local agent or a local staff to cover the upfront costs that are being generated. What can these upfront costs be? Well, it can be rent, it can be renovation of your office, it could be the purchase of equipment to start production, it could even be salaries. And as I mentioned before, it is illegal to hire people prior to your business license being issued, but it does not mean that it's not happening. So again, be careful how you're organizing your business. Obviously, the problem is that these funds are being paid to local accounts and they cannot be considered as part of the capital injection, the registered capital, once the business license is issued. In addition, it is extremely hard, once the bank account is opened, to reimburse either the local agent or the local staff to then pay back the parent company for these startup costs. As many of you may know, an individual in China, when opening a personal bank account, whether it's a foreigner or a local, can only exchange $50,000 US in a year. So be careful on how you're operating this. We've had some cases whereby close to $200,000 to $350,000 US was remitted to local personal bank accounts for startup funds, and it was close to impossible to pay this back to the parent headquarters. It just took a very long time to do so, causing problems then with your accounting books and, again, your startup funds. So, again, be careful on how you structure this. Try and do as many payments as possible from the parent company in order to start your operations. The second is undercapitalization. And, again, I really emphasized this earlier, and I cannot emphasize it more. One of the most common mistakes and serious problems with the applications is not putting enough registered capital. And as I said, it's just a very misunderstood area because people define it by minimum requirements, city requirements, etc. It should actually be based on your cash flow needs. So I'll go through here. One is the location. As I mentioned earlier, Dongguan has specific requirements. They require only very high-level investments with registered capital amounts of between 500,000 to 1 million US dollar. You also have scopes of business. There are some, to give you an example, if you are in production or even if you are in trading, 30,000 RMB will not be enough for you to cover all of your general and administration expenses, nor to cover the purchase of goods before selling the goods. So keep that in mind. And I haven't even included taxes into that calculation. So if you are in production, if you are in trade, you will definitely need a higher capital requirement purely based on your operational needs. You will need to buy goods before selling goods. You may need to buy raw materials in order to start your production. You may need to buy machinery. So keep all of this in mind. Then comes your cash flow needs. And again, you'd be surprised. We have many clients who don't even make a business plan or a cash flow plan in terms of how much money they need to start up in China. You can't avoid not doing this. One of the documents that is required when you are establishing an entity is a feasibility study, and within this feasibility study you do need to provide a P&L of the next 5 years of operation. So since you have to submit it anyway, it just makes sense to do it yourself and to understand what your cash flow needs are. Keep in mind, if you do want to increase your registered capital amount later on, the application procedure does take minimum 2 months. So again, 2 months to do the application procedure. So don't run out and then run out of cash and then say, okay, now I have to increase. You will not get the funds until the application is approved, which is 2 to 3 months after you submit the documents. So keep this in mind. Keeping the legal address of the LLC the same as the operational address. Many companies may advise investors that it is permissible for the LLC to register in one location, for example, in a small office building, but then have, in this, as an example, its manufacturing facility in a different location, for example, in the rural suburbs. Or you may, for example, have a trading entity set up their registered office address in a free trade zone, whereas they have their operational address in downtown Shanghai. So this is actually not allowed. It may be due to better preferential treatments that are imposed, but this is actually not allowed. And I just want to illustrate one example here where we were recently called in to handle a client with exactly this problem involved in production. Their legal address, so their registered office address, which was written in their business license, was not where their production facility was. And they were not happy with their previous provider who was handling the application, so we took on all the post-registration processes and applied for the Environmental Bureau appraisal. And this authority refused to accept and hear the case because the addresses were in 2 different locations. So as such, the Environmental Bureau would not issue the environmental license, which is required when you are producing in China, and we couldn't proceed with the application for the business license. As such, we had to change the original, we had to redo all of the first steps that had already been done in order to make sure that the operational address was at the site of the production facility. So keep this in mind. You cannot also expect that you register your entity in a residential building. All companies, if they are trading a service, must be registered in a commercial office building, and they must be designated as commercial office buildings, and a production facility must be registered in a factory. Again, this is actually common sense. So don't try to create loopholes when it will only cause problems for you down the road. I know China is known for creating loopholes and going around obstacles. There are options for this, but not in these certain criteria where it's registered address or your registered capital. It just does not make sense. In addition, there are inappropriate site locations. Who would have guessed that in China? Not all locations are applicable for all kinds of business, as I mentioned. There is factories, there are commercial, and there are residential, and they are actually designated. So when somebody buys a property in China, they are given an ownership form, and on this ownership form there is a designation of what you can do in this property. And as I said, you need to be registered in the right location. We have had several clients who never checked on this. They signed the lease agreements, knew that eventually they had to get out of the lease agreement, and lost their deposits. So again, be wary of this. Talk to your real estate agents. You may want to talk to the bigger real estate agents so you're aware of where you can actually locate. Another item I just want to mention, to give you another example, in Guangzhou, there are some districts where they refuse to accept foreign investors. So again, in Guangzhou, for example, you have to be careful which district you're going to locate. Then you have under budgeting of staff welfare costs. You have to pay in China not only salary, but also social insurance. And this is usually on top of the gross salary amount. And many people forget to add this into their budgeting. Generally, if you are making a budgeting, I would say calculate 50% on top of the gross salary. It's always better to budget for a little bit more than to budget for a little bit less. Every city in China has different social insurance rates, but on average, I would just calculate 50%, especially if you're doing budgeting. Underestimating additional licensing requirements. We have had several clients who did not realize or forgot that they needed to apply for additional licenses depending on what they were trading in or producing in. To give you an example, if you are importing food and beverage items, you do need to apply for additional licenses to do the importation. The same said for the cosmetic industry. So keep these things in mind, that applying for these additional licenses will again take time. If you are producing, you may need to take into consideration land use rights. And obviously there's a difference in land use rights. There's allocated rights, which basically means that someone else has the title, but permission to use for a specific purpose is provided to you. What this means is you're renting the land. Then you have granted rights, which means that you have the title and ownership of the land. So allocated rights basically means that you've been allocated the right to rent the land, and granted rights means you have been granted to own the land. You need to make sure that if you are theoretically purchasing a property, that you have really actually purchased it. You should make sure you have all the appropriate certificates in place and that you actually own the land. You also have areas where there are invalid scopes of use. To give you an example, agricultural land is usually at a premium, and permission to convert it into commercial use has to be obtained at the state level. It cannot be obtained by the local governments. So keep this in mind. Access rights. Some land can have issues with access rights, and details must be provided, and it must be written inside the agreements. Obviously, there are fraudulent uses of the land, which is a common problem, and you just need to make sure that you have a valid scope of use for the land, that you're not misusing the property. Exit strategies. Well, generally, people who are entering the China market, they can never foresee that they will ever leave the market. They see the potential being very great, and they try to develop the business in such a way that they're planning to be there long term. However, as many of you may know and you've read in your articles, certain things happen that you cannot imagine happening, and you may decide to liquidate your entity. In order to liquidate your entity, you do need to get approval from the Administration of Industry and Commerce, and these need to be highlighted very clearly in your articles of association. So again, this involves both the articles of association and just what common mistakes are that made by foreigners. They don't always consider that they are ever going to exit, so they neglect this. Don't neglect it. It can happen. I know it's not something people wish to happen, but make sure you clearly define in your articles of association. This is particularly important if you're going into a joint venture. So please keep that in mind, especially if you're going into a joint venture relationship. Now here I've highlighted the accounting and tax filing obligations. You'd be very surprised. People are never aware of what needs to be done when opening an LLC in China. It's actually identical to anywhere else in the world. You do need to produce financial management reports, and you just need to make sure that they're done correctly according to PRC GAAP. You have profits tax, which is paid quarterly. It's 25%, and it's unified throughout China. You have value-added tax, which is based on the sale and purchase of goods, and this is regulated at 17% if you are a general VAT taxpayer. To become a general VAT taxpayer, you must have a minimum registered capital of 1 million RMB, and what it means is that you can issue VAT invoices domestically. You then also have business tax, which is based on service invoices, surtax, which is based on the VAT payable and the business tax payable, and individual income tax. It's very important for you to be aware of what taxes are applicable in your business. I want to point out some considerations for ease of your tax operation. The biggest mistake a foreign investor can make, especially when they have just entered the China market, is trying to do all of this by themselves. For tax matters, please do seek professional advice in advance. Have your CFO and your parent company contact a provider locally in China in order to get tax advice. In China, it's very common for tax regulations to change daily, if not weekly. It's very rapid changes, so you have to be updated. On top of all of this, although there is a unified tax system, it does not mean that regionally these tax systems are implemented. Every location will have a different tax system, and every district within a city might even have a different tax system. So again, you need to check this out prior to entering the market. If you are in the market and you haven't done this yet, I do advise you to have this checked out. Be organized. It is highly recommended for all investors, all China entities, to have 2 sets of books. Obviously, it's a requirement of PRC law to have the accounting books in Chinese. It's even written in your Articles of Association that the accounting must be done in Chinese. However, it is strongly advised to have it also done in English. It is very important for your CFO and the headquarters to be able to understand what is actually being written in your financial management reports. Be aware of tax bureaucracy enforcement. The Chinese tax authorities have a wide network of tax bureaus throughout China. We have seen a growing trend towards enforcement in recent years, including targeted or random audits. And in recent circulars, there has been an enhanced emphasis on tax compliance. At the moment, tax bureaus are focusing on multinationals, but it doesn't mean that the medium-sized companies will be affected. You could also just be a company that is randomly picked, so keep that in mind. Another suggestion is conduct internal audits. You have to do an end-of-year audit in any case, but it could also be advisable for you to do quarterly or biannually internal audits just to see how the company is performing, to see how the internal system is being managed within your accounts department and then within the rest of your office, just to make sure that everything is in compliance and nothing is being hidden. My only issue with internal audits is that the internal auditor is required to obtain information from your staff, and if your staff are not helpful in giving information or giving documentation, then this should already be a sign to you that something is going wrong. So again, this can be a first step in regards to knowing whether you are in compliance or not, or whether your staff are mixing up the figures a little bit. Another recommendation is outsourcing administration functions. You can have professional advisors often provide a new set of eyes, and they can predict certain problems. They can make certain suggestions. And it might just be advisable both from the accounting, legal, and even IT side to outsource these functions. In addition, when you are outsourcing, they can be considered as your administrative managers, and they can just make sure that your staff internally are being helpful, are providing documentation, and it's just a basic run to know that your day-to-day business is okay. These are the annual maintenance obligations that are being highlighted here. I will be sending all of you the presentation later on this evening, so you can take a look and read through what are the annual maintenance obligations as well. I've highlighted here what are the main reasons for establishing an LLC in China. Again, these are strategic decisions that have to be made from the headquarters, and you have to know whether really the investment is worth it or not. Again, I'll send this to you, this presentation later on, so you can take a closer look at this. Again, one item I just want to point out here is to have a holding company or not. Here I've made the example of having a holding company in Hong Kong because this is actually one of the biggest trends and one of the biggest locations being used by foreign investors when entering the China market. Just for your information, there is a statistic in China whereby the highest amount of foreign investors comes from Hong Kong companies. It doesn't mean that these companies have actually been utilizing the Hong Kong company. It's purely for holding purposes. So do consider your structural strategy when entering China. Do you need a holding company? Do you not? Review double taxation agreements. This is very important. Hong Kong is, for example, developing its double taxation agreements. I believe currently it has 30, whereas a year ago it had only 5. Another holding company jurisdiction is Singapore, whereby they have an extensive network of double taxation agreements. Your CFO and your headquarters should make these calculations to know whether it makes sense to have a holding company or not, particularly with the parent company being in place, or whether it just makes sense to invest directly. So do take into consideration how should you structure your entry into China. Joint ventures, I just want to make a small point here. This is really not something that we recommend. If you can go into China by yourself without having a joint venture partner, then by all means do it. It's going to save you a lot of headaches and hassles, especially when decisions have to be made. And if you want to exit the joint venture, I can tell you now it's a very difficult procedure to do this in China. Which is why if you do need to use a joint venture partner, our suggestion is actually to create the joint venture structure in Hong Kong. In Hong Kong, the regulations are based on common law, and as such, it's very easy to either sell shares, buy shares, or sell the entire entity. Again, as I mentioned, you need to evaluate whether a joint venture makes sense for you or not. Nowadays, most of the market in China is quite open. There are very few industries which are restricted. So if you can do it by yourself, I would recommend that you go it alone. This is the end of our presentation this evening. As I mentioned, I will be sending the presentation to everybody by email. And if you have any questions, please don't hesitate to contact me. My details are listed here. You can reach me at christina.kohler@klako.com. I would also be available for a conference call if you want to discuss your situation personally. So please do let us know. For those of you that are newcomers to our webinar, I just want to point out that we do have 10 offices within China, Hong Kong, and Singapore. We have consultants that are based in Hong Kong and Shanghai. In all of our other offices are administration and CPAs. So if you do need advice, please do contact either our Shanghai or Hong Kong office. In addition, if you would like to know more about our webinars and you would like to subscribe, please go to chinainvest.biz. place inside your email address, and you will get updates on the webinars as well as our monthly magazines which are issued. I would like to thank everyone for joining me today, and I look forward to seeing you again in our future webinars. Have a very nice evening, and goodbye.